Welcome to the ORATS earnings report, where we scan for companies with upcoming earnings announcements, check out historical earnings information, and find a potential options trade. Let's start by running a scan on stocks reporting earnings this week, which includes the total option volume indicator, sorted from greatest to least. Focusing on Alphabet Inc. Class A, as we click through, we see this large cap company in the internet content and information industry reports earnings on Tuesday, July 26, after the close. The Earnings and Financials tab takes us to more detail, showing the options market expecting a move of 6.1% in either direction. This move was breached in 4 out of the last 12 earnings. During that time, the post-earnings move was outside of the implied range 5 times. In those cases, long straddles were profitable. The rest of the earnings moves likely yielded profitable short straddles. We can overlay quarterly financial data by clicking on the ratios below the earn move graph. Let's look at the PE ratio, which is the stock price divided by the trailing 12 months earnings per share. For GOOGL, the current PE ratio is 19.5, which is 56.3% over the average for the last 12 earnings observations. Returning to the Overview tab, we can quickly run a scan to find the best option trades. Since earnings are right around the corner, we scan for neutral strategies. Then filter the scan results by S% or smoothed edge by setting it between negative and positive 3%. This helps narrow the results to trades that are fairly priced. The highest ranked trade is a long put calendar with strikes at 109, expiring on Friday, September 16 and Friday, August 26, for a debit of 80 cents. By pulling up the trade, we can see the theoretical values in more detail. The distribution edge, found by the expected value of the payoff picture on the stock's historical distribution, has an edge of 48.2%. The forecast edge, which is derived from historical volatility, has an edge of 17.7%. Lastly, the smoothed edge, which is calculated by drawing a best fit curve through the monthly implied volatilities, has an edge of -2.3%. The edge is relative to the mid-market price of the trade. Greater positive edges are a theoretical benefit to the trader. We can also look at the payoff graph. The reward to risk divides the max gain by the max loss. Here the 3.5 to 1 is the ratio of the max gain of $300 to the max loss of -$85. There are 2 break-evens for this long put calendar at 102.09 and 116.94. The total Greeks and Think or Swim code complete the information on the trade analysis pop-out. Next, let's look at this trade in the Trade Builder. Over the last month, the stock price fell 6.9%, while the 30-day implied volatility rose 2.1%. The average slope of the trendlines is negative. The heat map on the right side of the graph is green where volatility and slope are undervalued, and red where they are overvalued. In this case, short-term IV and slope are neutral, while the long-term is overvalued. We can also see this trade overlaid on the monthly implied volatility graph in the Chain tab. The legs for this trade are circled. For any questions or issues related to this earnings report, please contact Otto at orats.com. To subscribe to the dashboard, go to orats.com and click on the dashboard product page. Thank you for watching. Please like and subscribe to our channel and look out for more videos.